Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of financial market updates. And starting off with the currency markets did remain in action while the Indian markets were shut yesterday. USD index recovered some bit as it was expected and mentioned by JK in the past commentaries. So JK, that was really good catch. We've seen euro moving lower with gold and other currencies acting as well. Contrary to all this was the INR, which strengthened quite well this Wednesday, moving to the levels of 84.40. On the macro front, we saw US GDP data. The US economy contracted at an annualized rate of 0.3% in Q1 of 2025. Interestingly, the Eurozone economy grew by 0.4% in the Q1 of 2025. So, JK, how do you see these developments shaping up the activity in the financial markets? What should we be expecting?
Good morning, Shikhar. I think the last 2 days have been full of action across markets, I would say. And let me deal with the rupee. Of course, this could be a slightly update for the day because a lot has happened. On the rupee, yes, a few would have expected a 1% gain for INR in a single session from the high, and it hit a 5-month low. And even while the market drivers were nowhere near bullish, like geopolitics and strengthening of the dollar index, just to mention two of them. So that's what happens when most of the market people assume a certain way and a large flow comes on the other side. Everybody's caught wrong-footed. What's been happening is that market seems to believe now that the various alternatives of India's response to the terror attack may not have much of an impact on the economy. Hence, they're not holding back any dedicated investment into Indian market. Now, the more important thing is the benign neglect of exchange rate moves by the RBI, which is a big departure from their multi-year established approach, where they used to come in and stop one-way move of the currency. And now it looks like they are allowing the rupee to move in accordance with the flow, so long as it is not interspersed with heavy speculation. Market has itself found long of dollars as exporters held back hedging for nearly a month now, as exchange rate had slipped suddenly and they were expecting a bounce. At the same time, importers have hedged at various levels, perhaps now looking a bit, greedy, as the rate has been dipping quite continuously. And of course, there has been an overall sense of dollar remaining weak in the medium term. And into India's exceptionalism, I would call it now, as high growth and low inflation, a very pragmatic approach in monetary policy, increasing the positive sentiment. Now, that's the background in which you can see this rupee strength. Of course, I think what other also supports is that most of the Asian currencies have strengthened 3 to 4%, some up to 5% in the recent months. Even the weakest, like Indonesian rupiah, have strengthened. And Chinese yuan has shown some traction also in the recent days after Chinese authorities have indicated that US authorities approached them for talks. So that's where it is. But does it mean that we're going to keep going one way in the USDINR? And I think we have to consider a few points. We are now at a level which was seen in September at 84 half range. DXY at that time was at 100. Now both are at the same levels, and both of them had taken off from those levels in the September 24. And now let's see what factors come into play. Whether DXY is looking for a more correction, definitely having risen very sharply. So that could be one factor. You have already seen another Asian currency, yen, which has been weakening towards 145 plus very sharply in the recent sessions. So some sort of restraint on the dollar rupee to fall further. Definitely difficult to break the 84.20 range. This was a big break when it happened on the upside. So this could psychologically prove some support, and genuine long-term importers or people holding dollar payables may be interested at these levels. Central bank action, of course, will come in if they see that moves are non-aligned with overall dollar index movements. On the That is about the rupee. And on the international side, there have been quite a few macro indicators. US employment data definitely have been quite underwhelming. ADP was lower, half of what was estimated. Job openings were, we shared earlier that it was lowest in 6 months. Jobless claims rose 241,000, along with continued claims, both that was highest since November 2021. GDP was minus 0.3%, and this is no as against 0.3% plus that was expected. However, people are blaming it on bunching up of imports ahead of tariffs. So on the other side, if you look at the consumption, that is held up. So the real consumer spending was at 1.8%, but it was still quite impressive. Chicago PMI, another indicator of economic activity level in the Midwest region, was slipping for 17th month in a row. Of course, the PCE inflation was 0% month on month, and that was quite encouraging. So all in all, there is some traction on rate cut expectations for June by the Fed by 0.25% now. But look at what the authorities think. The current Treasury Secretary says the yield on the 2-year, which is lower than the Fed funds rate, indicates that Fed will be cutting. Summers, the former Treasury Secretary, says it will be a grave mistake to cut if the Fed does, in the upcoming meeting. So that's a host. I mean, that's a range of views that your market and few authorities what they're indicating on the rates. I personally feel this coming meeting would be probably no change, but some dovish turn, which I've been indicating recently that looking at the various numbers and perhaps sidetracking inflation considered to be transitory by the Fed. So these are possibilities from me as far as the Fed is concerned. Before that, of course, we have unemployment numbers tonight. Non-farm payroll, down at 1,30,000, well above 2 lakh was what was seen last month. Unemployment remaining at 4.2%. This could be one big number or one real hard number that the Fed will be looking at. And if we do see much weaker number, that could put more conviction on Fed turning a bit dovish. So I think today's data assumes a lot of importance, and then we are into FOMC day. So that's about the US economy. And if you look at the other economies, Japanese have pushed back their expectation of hitting the inflation target by one more year, and that means market expectation of a near-term rate hike by Japan has been poured with cold water. So the Japanese has promptly weakened towards 145, and also it substantiates one view that emerged that US is not insisting on Japan to strengthen their currency. Of course, I mean, apart from going by headlines, we'll go by the actual market reaction. If the Fed, rather the US yields continue to drop, then you could see and strengthen a bit. But definitely, the way US assets are being bought now, particularly a couple of mega stocks like Meta and Microsoft announcing very good numbers yesterday. I think there is increasing demand for US assets, which have been sold off massively in last month. And with tariff talks getting better now, I think US may be favored for this month at least. You may see those which have been bought heavily may be sold off, and those which have been sold off heavily might be bought back a bit before market goes into summer break after June. So these 2 months could be consolidation for the dollar. Of course, the rupee, as I said, at a very key level, what dollar index does in the coming days will be very important. Just a word about the euro. We are definitely seeing, the expected correction, but it could extend further depending on the Fed message as well as the data tonight, and we also have the Eurozone inflation number tonight. So that's very important. So overall, the correction in the various big moves are underway. Gold also has seen nearly 9% correction. I think it is time for the market to pause ahead of the Fed meeting next week. Thank you.
Okay, JK, that was a really good summary. And yes, folks, as JK mentioned, we are seeing the correction of the big moves which has happened in the past few days. And at the prime of this particular correction can be seen as the movement in gold and euro. Uh, Likewise, as we've been talking about, there are kind of mixed signals from the macro data. For example, the core PC was slightly encouraging, but the US employment data was underwhelming, the GDP at minus 0.3%. So there's kind of a mixed setup for the US economy on the macro front. And on the European side as well, we've seen some bit of performance, but although there are a lot many other activities or the updates which Europe needs to work on. Today we have the inflation update, which we'll see how things progress for the European zone. On the Japanese front, they have pushed their inflation target by another year, and we can see the kind of movement in the currency as well, which was quite interesting up move on the USD JPY pricing. On the domestic front, yes, as JK mentioned, we few were expecting such strength in USD INR, and the flows just made the move quite more interestingly and unexpectedly in one direction, that was towards 84 half. Now we are at a level which was last seen in September, and interestingly, even DXY was at these levels in the at the same time frame, and then the move started in the opposite directions. So we should be seeing how things go about. As JK mentioned, it's near the key levels, and the central bank has also been relatively less active, as we saw on the day before yesterday's action. So let's see how things progress. And that's it for today, folks. We shall come back again on Monday with another round of updates. Thank you so much for listening in.